The whole world is watching, and in India the most intriguing question now is how many seats BJP will get and what happens to the stock market after BJP's win. Which stock will rally? Will market crash if BJP does not get desired number of seats? The entire list of questions are all on the same subject. The brokerage houses, analysts, newspapers, influencers all have already posted so many stuff and have given even a list of sectors and stocks that will fly. How to use all this information and get something solid out of it? That is what we want to do in today's video. Hello everyone, welcome back to Nandu's Equity. There are three possible scenarios predicted. The first one is outright BJP victory. If that happens, where BJP will be able to form the government without any support from its allies also. So then what happens? Nomura analysts expect that the market reaction will be very positive and it will rally a lot. And of course, domestic sectors, particularly financials, consumer discretionary, industrials, infrastructure, PSUs will likely to outperform, while IT and healthcare might underperform. The second scenario is NDA victory, meaning BJP falls short of majority but secures control of the government with the help of its allies. One can expect a sell-off in highly valued domestic oriented sectors, particularly industrials, infrastructure and PSUs. So Nomura expects banking, consumption and pharmaceuticals to outperform in that case. This third scenario is quite unlikely, but if that happens, say India coalition manages to get over halfway mark led by the Congress and also with the support from its allies, Nomura fears a sell-off across most domestic oriented sectors, particularly financials, industrial, infrastructure, consumer discretionary and a heavy sell-off on PSUs. And of course, the consumer staples, IT services and pharma likely to outperform. Apart from the three scenarios we saw, there is another interesting study. Bernstein has released 4-case study, like it says the probability of 4 scenarios instead of 3. So they are like if the BJP wins 290 plus seats, immediate market rally followed by a short-term profit booking would happen. High single-digit or low double-digit returns for Nifty this year is what is predicted. And the second scenario, if BJP wins 260 to 290 seats, mild profit booking near term, high single-digit market returns for this year, meaning about 8-9% in terms of returns. And then if the BJP earns 240 to 260 seats, moderate to heavy profit booking in near term, high single-digit market returns for this year. And fourth and last scenario is if BJP gets 240 seats, heavy profit booking in near term, low or negligible returns for markets this year. So there has been a lot of predictions like this, and one thing that we see is like there was a fear because of the low turnout in terms of voters. There was a fear whether BJP will get enough seats, and because of that there was a sell-off. But in the week gone by, there was a totally different scenario, as if June 4th result is already out and the market was going with a mad bull run. So apart from all these scenarios, we need to also see from these analysts and brokerages what kind of stocks and sectors have been picked up by all these. Before we dive deep into the stocks and sectors, we need to understand what is the predominant theme in the BJP's manifesto for 2024 elections. So they have promised some of the things I have just picked about, 8 of them that are topping: clean water, housing, town and city development, world-class infrastructure, focus on manufacturing, farming and fishermen welfare, MSMEs and other easy financing, housing finance, defense and railways, technology and innovation, and of course broader theme that supports most of it is about the PSU push. A word of caution, bumpy roads ahead once the euphoria dries out, and Indian market is definitely at the peak of valuation. It is highly overvalued and there could be strong case for bull run. However, after the election results is out, after this immediate reaction is out, there could be immense volatility for a short term, and of course there is a possibility of 10 to 20% market crash after that. And after this, all this happens, the next big event would be budget, and that would decide the market direction. So we need to be really cautious and careful. And of course, for a long-term bull case is still intact for India, so long-term investors need not worry. If we grab all these stocks that are discussed in all these articles and videos, and of course the articles of all the brokerage houses, we get almost 114 stocks. And how do we approach this? So what do we want to do? How do we approach? So next, let's dive deep into this. We want to check the manifesto which we have done, and the sectors to search and match, and review these sectors, how they are. And of course, after all these, that we want to also check for the valuations, understand the core business, and current situation is quite high. So finally, then you can come up with a strategy to build your portfolio, or if you already have one, you can add to your portfolio with a significant weightage, focusing on what is really out from the manifesto focus. The most buzzing sector out of all this is defense sector, and which has already gone too high and continues to have its momentum, but highly overvalued. All these 7 stocks are really great to have, but the problem is their overvaluation, and we do not know whether the value will ever come down because of the nature, as the Indian government is the major customer, and we continue to have a huge defense budget, and I feel whatever the government comes, the increase in budget for defense would continue. So these are going to be like a safe sector for a long time in India. However, there could be some valuation, because of overvaluation, there could be some dip here and there. But better way to approach this particular sector is to SIP mode rather doing lump sum. The very important part I found is railways, and almost all the 10 different companies in the railways area have already topped, and in fact they're all in the peak of their valuation, and it's already overvalued. And even we had released a video specifically focusing on railways earlier, and we had a detailed discussion and analysis of all these companies. However, looking at their PEs, none of them are available cheaper, and there may not be an immediate chance for them to get cheaper anytime, and we need to really wait and see how it unfolds and what kind of opportunities we get. And people who put on SIP of some of these will continue to add value to their portfolio, but it's very difficult to really decide to invest as fresh investments, to go any lump sum in any of these stocks. The infrastructure boom is going to continue, and especially road construction and government focused construction in terms of city, town, village development is going to benefit these companies like L&T, Dilip Buildcon, Adani Ports, NCC, IRB Infra, and Hindustan Construction. Of course, the valuation continues to be high, and we need to really watch out for the right price and right time to enter these kind of stocks. Most of the PSU banks are going to benefit. However, these 5 names I could pick out from all these analysts: Bank of Baroda, Union Bank, PNB, Canara, and SBI. And of course, Canara Bank and SBI stands out. SBI has already run up a lot. There is a lot of steam on Canara Bank according to me because of its recent stock split, and the real valuation of this particular bank attracts me. Affordable housing is one of the major theme, and Hutco and Canfin Homes could benefit from this. And of course, looking at the PE ratio and industry PE ratio, only Canfin Homes looks cheaper. And of course, apart from housing part, there could be supportive industries like steel and cements. The energy company is going to continue to benefit if the manifesto comes true, and already companies like Wari Renewable and all has gone multi-fold. There is a lot of hope on Reliance, Sterling Wilson and Praj Industries. And of course, these have also gone up quite high from the peak valuation. And looking at the ethanol production, there is some hope as the valuation is quite cheaper in this space. And there are 4 companies in this, like Uttam Sugar, Balrampur Chini, Dalmia Bharat and Triveni Engineering. Triveni Engineering in particular has been gaining technical strength, and of course other companies like Uttam is available cheaper from a PE risk perspective, and also it's a small cap company. So there are so many other companies focused on ethanol production, but these 4 I could pick from these analyst list of companies from all the analysts and brokerage houses. Steel and pipes are the next one that will grow along with the huge demand for infrastructure and housing. And there are some stocks that has gone beyond industry PE, and very few are available that are less than the industry PE. Of course, we definitely need to have a detailed analysis of each stock, so please do your own detailed analysis on these stocks. And some of them still look lucrative, but some are very famous name like Tata Steel, which is the most expensive out of this pack. Wires, cables, electronics are the other set of stocks that are expected to go high, and some of them again, or most of them, are highly overvalued, and we need to be really careful about selecting stocks from this category as well. MSME, NBFC and other financial lenders is another area expected to grow, and this has some value, and some of them are quite available cheaper than the industry price. Some of them have gone down quite a bit, like for example Bajaj Finance. It was in the peak, and then after its recent quarterly results it started sliding down, and there is a real good reason to find this to be a good value. But again, we need to see the market direction and compare all the other available stocks that are more cheaper. There has been a huge expansion of piped gas in India, and also sustaining the overall demand and supply in this particular area is quite challenging, and it continues to grow. So some of the stocks are available quite in a good price, and some of them are quite high. For example, Adani Total Gas is quite high from a P valuation perspective, and at the same time something like a MGL or Petronet LNG or even GAIL for that matter are available cheaper than the industry P. So there are some opportunities to look at this particular area or sector, and again be careful. The valuation perspective, we could definitely go wrong if we do not select the right stock and do a deep detailed analysis of each stock. There are some stocks quite unique and interesting related to water supply like JTL, Surya Roshni, High-Tech Pipes, and this is something I picked from these analysts. And of course, from a hotel perspective, Indian hotel continues to be very interesting theme. However, the valuation is quite high. And if you look at the startup culture, InfoEdge is another interesting stock, but the valuation is quite very high. API within pharma sector is quite an interesting theme, and of course the valuations have gone quite high in this particular theme, and strengthening India's position as the world's pharmacy is one of the theme from this manifesto that I could understand. That's where like we have Divis Labs, Syngene, Laurus Labs, Suven Pharma, and Ami Organics. But the problem with this particular theme is the overvaluation across all of these. But despite all these, there are stocks like Dr. Reddy's which is kind of available cheaper at this moment. But we need to be careful about pharma companies, and it has to really go through all this US FDA compliance requirements and so many different news that comes. It immediately affects all these stocks. So be careful while selecting pharma stocks. Auto space again going quite high, and some of the stocks within this space is quite lucrative, and especially the EV theme is quite hot. And at the same time, stocks like Electra, JBM Auto, Sona, BLV, and even TVS looks quite expensive. But however, in the recent times, Electra kind of stocks have been going quite high. In this space, Tata Motors available quite cheap, but due to the last quarter results, this stock got a hit, and it has come down drastically from its 1100 close to 1100 level to 950 level now, and it's still quite a promising stock in this area. And of course, M&M and other auto stocks are also quite interesting. So we need to really be careful again, picking the right stock with the detailed analysis. I am not doing any of these stocks in detailed analysis here, so please check for detailed analysis. Textile manufacturing is expected to grow. It's already going high, and there are some interesting companies like Welspun, KPR, Gokuldas Exports and Trident, but however, valuation of some of these companies are quite high. And from a national logistics strategy, delivery, TC Express and Blue Dart look interesting. Again, almost all the stocks that we are discussing mostly are having overvaluation, so we need to be really careful about while selecting any of these stocks. Capital goods is a highly promising sector for a very long-term perspective, and some of them are highly overvalued, so be careful. However, if you look at some of the capital goods stock like Schneider Electric, which has grown almost like 400 to 500% in the last 2 to 3 years time frame. FMCG continues to be a safe area, and then again here there's a lot of mix in terms of valuation availability. Some of them have gone quite low with recent time, like last 3 months to 6 months time frame, and some of them available still cheaper, and some of them, despite their overvaluation, still look strong because of their respective business model and moat level. For example, Britannia Industries, it's really a moat and monopoly in some of the key business areas. And same goes to Hindustan Unilever, Dabur, and currently things like stocks like Bajaj Consumer, Imami coming up, and maybe there could be more stocks, but this is something we got them filtered from the list that came from all the analysts and brokerage houses. Consumer discretionary or consumer expenditure is something unique. However, if you look at all these stocks, all of them are overvalued. So be careful if you select any of them and do a thorough analysis. Thanks for watching, and please click the like button if you find this video to be useful. And I do not have any association to any of the political parties, so please do not misunderstand that I have taken a stand to support anything. Rather, all these stocks and sectors came out from a list of articles and also the brokerage house recommendations that came, and I have just collated them and analyzed at a very high level. None of them I have done detailed analysis, so please do your detailed analysis. And of course, please consult the SEBI registered financial advisor for taking any financial decision. None of these stocks I recommend buy or sell, so please be careful while investing your hard-earned money.